June 25, 2026. The tape looked risk-on the surface, but dig one layer down and the confirmation still wasn't clean. Asia was broadly strong overnight. South Korea surged more than 5%, and Japan's Nikkei 225 jumped roughly 4.6%. Europe also traded higher. The 10-year yield fell to 4.39%, and lower yields typically support tech. That set a constructive table heading into the U.S. Open. China was the lone major laggard. But here's where the surface red gets complicated. SPY closed nearly flat, up just a fraction of a percent, closing around 733.5. QQQ outperformed, gaining 0.81% to close near 716. Tech leading the broad market is usually a risk-on signal. The problem? VIX rose 3% alongside those gains, closing near 19.2. When volatility climbs with equities, the market is still hedging. That's not a clean risk-on tape. It's a cautious one. The big single-stock headline was Apple, which sold off sharply after announcing Mac and iPad price hikes tied to higher memory costs. That pressured mega-cap sentiment. But the weakness was not only in Apple. Consumer discretionary was also under pressure. XLY fell nearly 1.5% and now sits below its 20-day, 50-day, and 200-day moving averages. At the same time, industrial surged more than 2%, healthcare gained over 1.5%, and energy popped as crude rallied after reports that Iran fired on a cargo ship near the Strait of Hormuz. Gold also moved higher, which gives you another cross-current. Equities were green, but volatility, oil, and safe haven demand were also rising. That keeps today's label complicated. Now for the levels. In yesterday's brief, we flagged 721 to 726 as the resistance zone QQQ needed to reclaim. Today's high tapped 727 intraday, so the test happened, but QQQ closed back near 716. That means the confirmation did not come. That is now 2 sessions in a row where QQQ has poked through that zone without holding it. Until there is a closing break back above 721, the recovery from the recent pullback is still unfinished. For SPY, the 729 to 730 support zone that has held all week is still in place. That remains the downside level I'm watching. The 50-day and 200-day uptrends remain intact on both SPY and QQQ. But SPY is still below its 20-day near 743, which is acting as overhead resistance. The dollar is another concern worth flagging. DXY remains in an uptrend, with RSI near 73. That is still overbought territory. A sustained strong dollar tightens financial conditions and can pressure multinationals. Today's small dollar pullback gave the market some relief, but the broader dollar trend is still up. So the base case is consolidation, not breakout. The weight of evidence, VIX elevated, QQQ unable to hold above resistance, consumer discretionary under pressure, and the dollar still extended, points to near-term choppiness inside a structurally intact uptrend. There are no major earnings catalysts flagged in the next 7 days, so the tape is likely to stay headline-driven. Hormuz developments, dollar dynamics, and whether the Apple price hike story broadens into a larger margin or demand concern. The setup improves if QQQ closes above 721 and holds it. Risk increases if SPY loses 729 and VIX pushes above 21. Price still needs to confirm the next move either way. This is educational content, not financial advice. The brief is AI-assisted and based on market data, news context, and quantitative signals. Projections can be wrong, so always verify the data and make your own decisions.